Hello, everyone. I'm Krista Das, and you're watching Smart Investing Market Insight at TaipanFinancialNews.com. Certainly, last week proved to be a bit of a bumpy ride for investors as the Dow tumbled 5%, taking with it precious gains. If you haven't fully recovered, I have two suggestions for you. One, take 2 Valium and call your doctor in the morning. Or 2, keep watching Market Insights. While we don't like to brag, let me point out that just 2 weeks ago on this show, senior analyst of the Wave Strength Charting Group, Adam Lass, cautioned investors that a correction was coming. He warned viewers that the Dow was due a pop. Adam even offered TFN viewers the same play he recommended to his Wave Strength readers, Diamond Trust as a hedge against a waning Dow. Today, I'd like to point out another opportunity. In fact, take a look at this chart. Right here points to the start of what my next guest calls the commodity supercycle. Christian DeHamer, creator of the Red Zone Profit System, says there is no doubt that we are in a commodity supercycle. Prices of tin, lead, nickel, and uranium are hitting new highs. Welcome, Chris.
Thank you for having me.
Before we get too deep into the subject, can you explain for viewers what a commodity supercycle is?
Well, the idea is based on the fact that China and India and other emerging markets such as Brazil and Russia are growing in excess of 7, 8, and in case of China, 10% a year. And you're having 4 billion people in the world who want the same things as the first world country wants. Mm-hmm. That is electricity, plumbing, housing, cars, everything else. And all these things take raw materials.
Now, some analysts have said the commodity boom is the biggest boom on Wall Street since the tech boom of the 90s. Is this the first commodity supercycle, or have there been others?
Well, there has been a supercycle boom in the early 70s. But the difference is this one's caused by demand, whereas in the 70s it was caused by a lack of supply. That is the energy crunch caused by the creation of OPEC.
Chris, some experts believe the cycle was pushed into overdrive by 2 things, China and 9/11. China for its hypergrowth and 9/11 for the fear it created in commodities, particularly oil. Do you agree with this assessment?
Well, I agree with the first point. The second point is a little bit doubtful. The idea is that I'd say it has less to do with 9/11 and more to do with the falling dollar. Now, you can equate the end of the tech wreck and 9/11 with the falling dollar in that money supply has been ramped up to stave off the recession, and therefore the dollar's falling. So in dollar terms, oil looks a lot higher than it does in, say, euro terms.
Mm-hmm. Chris, according to Reuters Jefferies CRB index, the chart I showed earlier, the commodity supercycle, took off around 2002. In fact, the index, which includes copper, lead, tin, corn, steel, sugar, and wool, has soared back over 90% to its highest price level in its 60-year history. Are those same sectors behind the supercycle's increase?
Oh, yes, absolutely. It's all on the demand side. It's all about globalization, the world economy just booming, and all of this takes resources. And so obviously those resources are going to be driven up in price. And it's interesting to note, you talked about last week the Dow falling off, and that was caused by Shanghai selling off 5% or 3.9% a day. And Russia over the past 5 days has been down 15% in ruble terms. And so what you have here is many people explain this away as fears of the U.S. housing market problems or of China being overheated. And yes, that might be true, but what's not making the papers is that hedge funds on the London Metal Exchange had to puke out a bunch of supply because they were caught on the wrong side of that trade, and they were caught with their pants down. And now so what you have is a surplus being dumped. So over the past week, you saw all these commodities selling off. But this is from the stockpiles. This isn't a demand-driven trade. Right. And so I would suggest that you be buying the dip all this month.
This is great news for investors. Legendary investor Jim Rogers has stated that he believes the supercycle could last until 2022. But I wonder if we shouldn't be concerned about approaching a bottom sooner rather than later.
Yes, well, I mean, there's bottoms and there's bottoms. But I think you're going to have a correction. I think we've already started this correction. And whether it's 15% or 33%, somewhere in there, yeah, I'm looking to buy all through that, because demand equation's still there. The fears of a China meltdown are overstated. They've been growing 10% for 30 years. I'm not going to get in front of that train and say next year it's going to end. I don't believe it. So 2022, I don't know what he bases his numbers on, but I think you have the demographic growth to sustain it for the next 5 anyway.
Mm-hmm. Is the commodity market a safe haven for investors, or should we expect some volatility?
Well, of course, there's volatility in every market. There's, safe havens. In my mind, you're better off with a good offense than a good defense. And, I try for big gains. And if I pick 10 stocks and one goes up 100% and the rest don't go up at all, well, then I'm at 10%. Just like buying your supposedly safe mutual funds. But, it's much more exciting my way. Plus, my track record proves that I've beaten, 90% of the mutual funds anyway.
Is there one segment of the super cycle you think investors should pay close attention to?
Well, I've got a couple: nickel, tin. There's a real interesting story in tin, is that tin has been flying lately because the Chinese have put a 10% increase in their export tariffs. Mm-hmm. And along with this, Indonesia is the largest regional tin producer and the largest tin exporter in the world. And PT Timah recently drove its competition out of business, or, well, let's say the political situation was that 50% of the tin exporters in Indonesia got shut down for illegal mining, and PT Timah is the only one left standing. And the price of tin is just flying. I recommended that buy last week.
How difficult is it for investors to get into this company? Are we talking about ADRs here?
Well, there is a pink sheet there, but I wouldn't recommend it. I'd recommend going straight to Jakarta. There are people like Peter Schiff who can do that for you, or foreign brokers. Interesting to note that E-Trade is getting into the foreign markets, and they're in about 12 now, and they're going to expand to 45. So it's going to be easier in the next few years.
I understand you're producing a special investors briefing report on the commodity supercycle. Any idea when that will be available for viewers?
Well, I'm working on that right now. We'll try to get that out as soon as possible, maybe next week. We'll definitely be out before the bottom, the short-term bottom here. With I'm going to have 5 stocks you want to own, and just drop us an email and we'll make sure you get it.
All right, sounds good. Thanks, Chris. Very interesting information.
All right, thank you, Krista.
Chris's report will be available right here at taipanfinancialnews.com. If you'd like to get a copy of Chris's report, please send an email to taipanfinancialnews.com with the subject line, Advanced Copy of Commodity Supercycle Report. Or if you prefer, please call our customer service department at 1-888-811-9492 and let them know you'd like a copy as soon as it is ready. That's it for now. I'll see you again. Have a great week.